Hey everyone, welcome to this week's AMA session. Great to see so many people joining the call. It's amazing, so thanks a lot. Maybe you already know we are distributing POAPs at the end of the AMA session, so stay around and make sure you claim yours. So as announced, today we're going through the DIVA Tokenomics, which we published beginning of this week, and which I hope some of you read and might have some questions. So I suggest I quickly go through the article, the main points, the main mechanisms, and then we can open up for questions for the community. Amazing. Let me open the article, which you find on our website under blog. DIVA Tokenomics. So I think many in the community were curious how the DIVA Tokenomics look like. In our docs, we were saying for a long time that DIVA token will be a governance token, and here nothing has changed. But over the last couple of weeks, we kind of like fixed more or less the final design, how the governance will look like. And when we were thinking about how to design the DIVA token, we wanted to improve in two areas. So we wanted to improve relative to existing token-based governance models that are used, for instance, by protocols like Aave, where you have regular polls and like participation requirements from token holders. And we also wanted to improve in the flexibility of tokenomics, meaning that we wanted to kind of like not lock in the tokenomics on day one, but kind of like have flexibility and have like, how do I say, buy time in order to lock them in at some future point in time when the protocol was mature. So these were the two things we wanted to optimize for, and we looked at like what's the problem with existing token-based governance models. Maybe you guys will be familiar with those. I think the most or the biggest issue is the low participation rate, right? Let's be honest. I mean, everyone is busy, and if you have to participate in 10 polls every month, it's just time consuming. If you want to do do voting right, or participation in governance right, you need to educate yourself, you need to read a lot of stuff to prepare, right? And just let's be realistic, it's crypto, like people don't have that much time. And I think that's a big problem actually. So if you have seen, Mark Zeller from Aave just recently posted that two non-contentious improvement proposals for Aave failed because they didn't reach the quorum, like a minimum participation rate, right? So that's a big issue that we want to overcome with our model. And the result of low participation or things like that is that it just slows down processes, executions, right? You have to set up the poll again and run it again and convince people to participate. It's just, a lot of effort and quite inefficient. So that's one area. And as I said, like on the tokenomics side, we want to add more flexibility. So what we see quite often is projects just locking in the tokenomics from day one. I think the most popular example are these Vault Escrow VE tokenomics, which were pioneered by Curve and have been implemented by many other projects. But the thing is, a protocol goes over different stages in its lifetime, right? And at different stages of the lifetime, you may need different needs. So if you design your tokenomics in a very flexible way, you can accommodate those needs. If you lock them in at day zero, you might not be able to react to changes, right? And that's what we wanted to kind of like optimize for as well. And maybe one of the reasons why we see those weaknesses in existing models is that projects try to enforce decentralization too early. They want to be decentralized from day zero before product market fit is found. And I mean, we just recognize that decentralization is a process that takes time, right? And yeah, so our approach is to find a balance between flexibility and control in the early stages while still having a path towards decentralizing DIVA protocol. And yeah, so these were our design goals, and what we came up with is a mechanism that we refer to as decentralized delegation. So delegation is widely known concept in governance. So basically you delegate the decision making to some other party, right, to a representative. And yeah, that's actually this a similar idea for DIVA protocol, where DIVA token holders would delegate the decision making to a central party, and that central party we refer to as the protocol owner. So the delegation works by staking. So let's say you guys like me, okay, how I'm doing my job, for instance. You could stake or lock in your DIVA tokens and flag that these DIVA tokens or this stake is supposed to be support for my account, right? So you're still owner of your DIVA tokens, but by staking or locking in DIVA tokens, you express support for one party that shall be the protocol owner. And the protocol owner is responsible to drive adoption and also for value creation initiatives. This may include growing the developer community, growing the application layer on top of DIVA protocol, expanding Oracle integrations, doing marketing, and all these kind of stuff, right? And most importantly, the protocol owner is expected to work towards the final goal, which is transferring protocol ownership to DIVA token holders, and with that, fully decentralize basically the setup. Now, in return, the protocol owner is given exclusive rights, right? And the main one are monetary benefits. So for doing that job on behalf of DIVA token holders, they get exclusive access to protocol fees and to DIVA token issuance to fund those initiatives. So I will talk a little bit on protocol fees and DIVA token issuance a bit later, but yeah, so that's kind of like the general idea. So what do we achieve with having a delegate? So having a delegate, you are quite flexible because it's now you move the power to a central party or entity, and they can make the decision based on your behalf. Now the problem with these type of central setups is these parties might abuse their power, right, and not act in the best interest of the DIVA community. So what we added on top of that delegation process is a process where DIVA token holders can basically replace the protocol owner with a new one at any point in time. And with that, you would cut off the previous owner from the fee streams and the DIVA token issuance, and basically give that right or access to the new owner. Exactly. So, and how that would work, let's say you all of you staked your DIVA tokens to support me as the owner, right? And at some point you think there is a better one that could there is a better owner that will bring us to our final destination. So you could kind of like remove your stake, so basically support for myself, and stake your DIVA tokens towards a new candidate. Now, if a candidate receives more support as measured by stake than the current owner, like myself in my example, a 30-day showdown period will be triggered. And during that period, people can continue to stake or unstake, and with that kind of like converge to the candidate that should take over the protocol next. And at the end of this period, you basically take a snapshot and then you see, okay, who has received the most stakes, right? And that candidate can then assume the protocol ownership, and in that process, you basically transfer the ownership from one owner to the other one. And so this process is depicted here below in the chart. From an implementation perspective, it's a little bit more tricky to implement the snapshot. So yeah, but I think in simple terms, just think of it, there's a snapshot and then the winner is basically taking over the ownership. Yeah, so initially we, the Genesis team, so basically the team that is currently working on DIVA protocol, it will hand over the protocol ownership to DIVA Technologies AG. It's a company that was founded by us and is incorporated in Switzerland. And that's how we start, but we have this decentralized mechanism. So if the community or our backers or other parts of the Genesis team or other people within the Genesis team are not happy with the job we're doing, they can replace us via the mechanism that I just described. Yeah, by the way, this mechanism we refer to as the decentralized protocol takeover mechanism. Okay, let's briefly look at the benefits of this approach. So first benefit, you have fast execution, right? Central party, super flexible. You basically don't need to run polls for every single decision, but it's all centralized. And this is especially important at the beginning where like things are moving fast and yeah, decisions need to be taken quickly. Then we also have minimal governance. By staking your token for your favorite candidate, you can basically just leave it there and trust that the protocol owner will do their work. And if you notice they don't do their work properly, right, you can unstake and stake for another candidate. And you don't need to constantly participate in polls. However, the protocol owner can still kind of like organize these polls that you already know from other protocols, just to signal to the community, hey, look, it's important, or it's important that I get your input, right? And he could weight the how to say, the survey results by the token balances of the participants in the poll. And also one aspect that is no longer relevant when it's kind of like only about getting community feedback is the quorum, right? If only 1% of the people participate in that poll, I mean, it will not slow down any process or anything else, right? So it's kind of like just a signaling type of action that can be done by the protocol owner. Then the third benefit of the approach is it's decentralized. So despite the central element that we have, you have this decentralized protocol takeover mechanism that is underpinning this centralized element. So it just ensures that This process ensures that this central party is kept in check. And yeah, so that was about efficiency and effectiveness of governance. And then the fourth benefit of these of the tokenomics is that the core utility of the DIVA token is reduced to selecting the owner. And any additional utility can be added on top by the protocol owner. So if the protocol owner wants to, I don't know, run these polls, as I mentioned before, right, he could use the DIVA token balance to as a kind of a weighting mechanism for votes, or I don't know, he could add other benefits that would benefit the community. And yeah, it's quite open, and you can really adapt it to the needs of the protocol in the different stages of their lifetime. Exactly. Good. Then, so I mentioned protocol fees and DIVA token issuance before as the main benefit of becoming a protocol owner. Regarding the protocol fee, so it will be set to 0.25% initially. So every time someone redeems, 0.25% will be sent to an account that the protocol owner controls. And the protocol owner has also the flexibility to change that rate within a range of 0% to maximum 2.5%. So what could happen, the initial owner could say, okay, to bootstrap that protocol, we remove the fee, we set it to 0, and then increase it later, right? So that could be one possible action. And yeah, we consciously hard-coded the maximum to 2.5% so that there is no way to drain the collateral from a pool into a protocol. Exactly. And on the DIVA token issuance, so let me quickly explain or spend a few words on the DIVA token release schedule. So there will be a maximum of 100 million DIVA tokens in existence, so this will be hard-coded in the token contract. And when we launch mainnet and the token, roughly 20% will be unlocked. So majority will be the Genesis team, early backers, but also participants in our testnets. So in the initial phase, we have for the first testnet phase, we have allocated roughly 1.3% of the overall supply to participants. So basically, if you just base it on 20%, this is actually 5% of the overall circulating supply at the beginning that we allocated or will distribute to testnet participants. The Genesis team and investors will have a 2-year vesting period. So it's just to signal our commitment that we do this long term. And over these 2 years, roughly 15 to 20% will be unlocked. So 2 years after the launch, you can expect roughly 35 to 40% of the overall supply being in circulation. And the remaining 60 to 65% will be unlocked gradually at a rate of 2% per year, subject to the supply cap. So as soon as we reach 100 million, there will be no issuance anymore. So it's not in perpetuity. And this is all about helping to fund the development of the protocol. So especially in the early phase of the protocol where the fees might not be sufficient to pay developers, and yeah, so this will be kind of like a helpful source of funds during that phase. And what this also implies is this 2% is hard coded in the smart contract, so it's not it cannot be changed by the protocol owner. So it's really like a fixed release schedule that is encoded in the smart contract. And with 2%, as you can see here on this graphic, it will take like roughly 30 years until all the 100 million tokens will be released eventually. So again, next to the 2-year vesting period that we have in place, I think this is also a signal to the DIVA community that we want to do this long term and it's not just a side project. Maybe one more comment here. So the numbers that you see here are indicative. So that's why I use a circa or like a range, because we're currently in fundraising and we don't know how much we will raise. And we are also planning the second phase of the testnet, incentivized testnet, where we also still have to kind of like agree how much we want to release in terms of tokens. So just take it as indicative, and as soon as we have the final split, we would release another article with all the details and an updated chart. But I think, like, based on the assumption that we've made, it will look pretty much like that. Yeah, that's on a high level how the DIVA Tokenomics will look like. So I think it's a pretty novel approach, which I haven't seen yet. But I mean, you can tell me if you have seen something like that in other projects, and I'm happy to explore their approach. But so far, I haven't seen anything like that. And yeah, I think our approach combines the best of a centralized approach into decentralized approach. So we have the flexibility and efficiency of a centralized approach, but underpinned by a decentralized mechanism. Yeah, so that's on the DIVA Tokenomics. Maybe just a bit of an outlook. We are going to launch the mainnet following the audit in January, and so the audit will be in January. The launch will be in February, most likely, and coinciding with the token with the mainnet launch, we are also planning to do a token sale using the LBP model, so liquidity bootstrapping pool on balancer, which is essentially a Dutch auction where you start very high and then price decays over a certain period of time and finds an equilibrium as participants start buying in. So that's just, yeah, that's what we're planning, and it's about giving everyone a chance to take part in DIVA protocol governance and help to shape the future of the protocol. Cool. Yeah, so I talked a lot now, so sorry for that. So I suggest I open up for questions from the community. So when so GeoGraphinist is asking, so when the token is unlocked, is it from above or below? Not getting that question. What will be the unbonding period of the stake DIVA tokens? There is no. If you stake the tokens as a sign of support for a candidate, okay, there is a 7-day period that you have to keep them staked or locked, and this is just to prevent flash loan attacks. And I think, yeah, so if you stake something, you can unstake only after 7 days. Yeah, and maybe one more confusion that could arise. So when I talk about staking, it's not something where you put in lock-in funds and get a yield in return. So you don't get a yield in return. You basically stake to vote. Yeah. DIVA token for community. Yeah, as I said, like it was 1.5 0.3% of the overall supply, so more than 5% of the initial circulation for participants in the first testnet. And we will also have a second phase where we haven't decided yet how much we're going to distribute, so more updates on that soon. So Graphinist sent a screenshot. So when the token is unlocked, is it from above or below? Well, the unlock happens from the 60% that is not released within the first 2 years. So, yeah, so I'm not sure whether I'm getting your question. Will there be a token that we get in exchange when we stake our DIVA tokens, or the staking will just lock? Yeah, it will lock. So you won't get like something in return which you can then trade. I don't think it makes sense, to be honest. So you can stake just like you don't have to stake all your DIVA tokens, right? You can just stake a portion of that which you don't want to sell, which you want to keep for a longer time. And also what I want to highlight here, a protocol owner can also just have 2% of overall DIVA token supply as the support, right? So the next one, so if a new owner would need to just reach support more than 2% in order to get a chance to take over the protocol ownership. So this is quite dynamic. So you could even be protocol owner with 0.5%, right? So yeah, there is no threshold or no quorum like you would see in other governance models. How far the team's been in fundraising? What are future goals and plans for the funding? Any potential targets? Yeah, I mean, we started our efforts. We talked to a couple of investors. We're having a few promising meetings in the next few weeks. But so far the markets, yeah, is a little bit challenging, as you may know. So it's not that easy, but we're giving our best. And sorry, who's on me? Okay. Yeah, sorry, there's someone not on mute. Okay, no, it's better. Yeah, and the goal with the funding is basically, so once DIVA protocol is deployed on mainnet, you want to grow the application layer. You want to give out grants to teams that build applications on top of DIVA protocol. You want to integrate more Oracle. So right now we work with Teller to integrate their Oracle, but we might also integrate UMA or Chainlink or any other Oracle solution that people might ask for. So that's basically what we want to achieve with the funds that we plan to raise. Can we earn DIVA in any mainnet task? Yeah, I mean, this is the beauty of the model. The protocol owner can basically decide if there will be another round of airdrop or so, DIVA token airdrop. Yeah, so it's not yet decided, but it's possible in the tokenomics model that we have set up. There's someone not on mute and I can't see it. So can I mute everyone? Okay. Any timeline decided for the phase 2? Yeah. We're still preparing a few things, and I mean the goal is if we run testnet phase 2, that we have everything in place, and this is kind of like the last test before the mainnet. So we want to make sure that everything is in place and not half ready when we run testnet 2. So please bear with us, please be patient. There will be a phase 2, but we need to finish a few things first. And also the DIVA Tokenomics required a few implementations on the smart contract side. And as we're having the audit in January, we're kind of like prioritizing that part in order to be ready and not delay the project launch. 2% vesting is tight, 30 years too long. Yeah, I mean that's our current thinking. If you feel that's too long, 30 years is too long. Yes, it's too long for crypto. Let us know. But yeah, I mean, if you have other ideas, let us know and we may consider. DIVA governance tokens, so holders will get any fee rebates on interaction with the protocol. Yeah, as I said, this is up to the protocol owner to decide what kind of benefits he wants to give to DIVA token holders. So the main utility is voting on the protocol owner. Everything on top is basically up to the protocol owner to decide. Is there any Gleam or referral program before mainnet? Not planned. I think the second phase of the incentivized testnet will be probably the main kind of like activity where you can earn DIVA tokens. Do you plan on ongoing multi-chain sometime in the future? Yeah, that's definitely our goal. So when we launch on mainnet, we will deploy on multiple chains. So most likely on Ethereum, Polygon, and Arbitrum. And further down the road, we are also planning to deploy on other chains, because like DIVA protocol is supposed to be an infrastructure or piece of infrastructure that, say, Web2 developers or other people can use to build things on top. And we also want to give them the full flexibility which chain they choose. And this means we have to deploy on many different chains, but we will start with 3 and expand on that over time. If there will be second phase for testnet, when will it be? Yeah, as I said, I mean, we're prioritizing the smart contract audit right now and have to finish a couple of things before we're ready. So stay tuned for that. Yeah, January is close, that's true. We're trying our best. I mean, it's not like we're sitting around and not doing anything, so just be patient, please. DIVA is quite tough. How can you guarantee that the newcomer will come and use the protocol smoothly? Yeah, I mean, it depends which application you build on top. And if you have attended one of the previous AMA sessions, we have shown a conditional donation platform that we're currently building, and there the user doesn't see anything that's about DIVA protocol. So it's basically in the background and abstracted away from the user. So the user will have a donate button. Yes, he will need MetaMask to donate, but apart from that, he will not realize there is DIVA protocol in the background. I would agree with you, the DIVA app that we built, right, which has all the functionalities, so you can create your products, you can trade them, you can settle those derivative products. I agree with that. That can be quite intimidating for users, but I mean, the DIVA app is meant to be a reference implementation for all the other apps that can be built on top. Please make people eligible who were not able to do all tasks because it was very tough. Yeah, I mean, everyone, even if you manage to do one single task, you're already eligible. Who will decide the protocol fees? Will there be a proposal on that, or initially it will be 0.25%? So yes, initially the plan is to put it to 0.25%, and then the protocol owner can decide what the fee is. Obviously, if he sets it too high too early, that would probably hinder the adoption of the protocol. So probably at the beginning you want to keep it as low as possible to bootstrap. Yeah, and it's with the protocol owner to decide on that. And yeah, I mean, he can also involve the community here, right? He can update it, he can trigger the transaction to change it, but he can also involve the community, run a poll on a snapshot or so. Yeah. Where does DIVA name come from? Yeah, I think it's, yeah, just a few letters taken from the word derivative, and yeah, DIVA sounds like very elegant, and we just liked it, so we took it. How will we adjust to the volatility of the market? Looking the current circumstance, any target price, which is the team looking for the token? No, I mean, that's why we are doing the Dutch auction approach, which I think is really great. You start high, and then the price drops, and people buy at the price they feel is the right one, and yeah, no real target price for that. Do you have any plans for the participation who are not able to submit their address in previous round of testnet? They will have completed the first round of testnet successfully. Yes, there will be a second round, so stay tuned for the announcement with more details. When mainnet, which chain? I addressed that already. How I trust DIVA for DEX. Yeah, DIVA is not a DEX. It allows to create and settle derivative assets, and the trading of these assets you can implement wherever you want. It can be Uniswap, it can be 0x, it can be any other trading infrastructure. You didn't state the number of minimum or maximum delegates. Yeah, it's just one owner. It's just one account that will be the protocol owner. And I mean, it could also be a legal entity that consists of many people. Yeah, that make the decisions in a democratic way, and then there's one person that will eventually execute. And maybe this delegate could also be, or the protocol owner could also be a multisig, right? So it could also be a smart contract. And I think that's the ultimate goal, to make it a smart contract and not a central party. How long after the first 20 million of the maximum supply before the next release? Not sure I'm getting that. So there is a fixed schedule for the vesting. The DIVA token unlock is also fixed in a smart contract, so you can basically model it out like we did with the chart that you find in the article. Does DIVA support layer 2? Yeah, the contract is written in Solidity. We can deploy on any EVM compatible chain. So as I mentioned before, Arbitrum is one of them where we want to deploy the protocol on. If most of member group up and side corner one person who is owner, there's any rights for him to save from corner. Okay, can you maybe try to rephrase your question, because I don't fully get it. Group up and side corner one person who is owner, there's any rights for him to save from the corner? No, I mean, that's a whole thing. Yes, you could have a group of people that will organize and trigger an election cycle where at the end the current owner might be replaced, but I mean, they will probably have a reason for that, because they think they can add more value than the existing one, right? Are quiz token rewards subject to vesting? No, at the beginning, the current thinking is quiz rewards and testnet rewards will not be subject to vesting. Only 5,000, but AMA join 30k. Yeah, help us to increase the Twitter follower number to make it match with the Discord members. Yeah, okay, cool. Kudos to you. You're addressing each question so well. I'm lost for words. Thank you. Appreciate that feedback. Isn't 30 days showdown period a bit long? Anyone can hurt the protocol in this period of time. I'm not sure what you mean by hurt, but during that period, the protocol owner, for instance, cannot change the fees or cannot change the settlement periods, which he has also authority to. So we will, as soon as this showdown period is triggered, certain functions that the protocol owner can typically do will be immediately disabled, and then he needs to wait until this election cycle ends, right? Yeah. How about the liquidity provider? Yeah, not sure what you mean by liquidity provider here. I mean, you can engage in a bet without. When you talk about liquidity, you need to distinguish between primary markets. So basically, you and I entering into derivative agreement, like a bet, for instance, right? So I create it, send it to you, fill it, then we have a bet, and then we wait until the outcome. So there is no secondary requirement for, or no need to trade in between. But obviously, if you have products where people want to trade during their lifetime, then you need like market makers that will offer liquidity. Yeah. And investing schedule, we addressed that point already. All right. Yeah, I think thank you all for joining. So Precious, our community manager, will get back to you regarding the POAPs. Or do you want to say something, Precious?
Yeah, yeah. So I think it will be better for us to do it uniquely in the DM. So they are going to send a DM, and I would have to drop each link to mint the POA piece.
Okay, they will send you a DM and then you will send them the link, right?
Yeah,
Okay,
yeah. I
cool.
have a record of everyone who joined the call. So
Okay,
yeah,
I also quickly screen through so that you have all the names and nobody's
cool,
tricking you.
cool. Yeah.
All right,
I mean,
great.
the turnout was massive. Yeah, with everyone who joined.
Perfect. All right, I appreciate for everyone who joined, and yeah, see you in our next AMA session in 2 weeks. Have a good time. Bye bye, everyone.